there's a legit probability of a Biden win, how would we protect the portfolio if corporate profits via tax changes will be undone? What are you advising clients regarding the upcoming election, and when do you see long-term for trading moving forward if all capital gains is taxed at income? Yeah, we actually talked about this on the call today, and JT made a very good point, which is actually some of the demographics in some of the swing states have really tilted towards Biden in terms of, I guess, less educated whites being a smaller percentage of the electorate. So that hadn't even been something we'd been talking about too much. But yeah, I mean, if you look at today, it doesn't look great for Trump, but there's also 110 days until the election. A lot can happen. And as it relates to taxes,
even if it is Trump, you're going to have down earnings. Yeah. So let's just be clear, all right? If you don't have Trump, it could be much more dire for longer. Slide 53, guys. And our call is it could take 12 to 18 months with Trump, okay? So without Trump, it's going to be worse. I don't know how much worse, but the way I'd think about that, Jonesy, is I'd basically take this outlook, which is clearly ours. You know, Wall Street doesn't believe this, but we just elongate how long year over year out in time, you know, corporate profits are negative. You know what Wall Street thinks? Wall Street thinks that corporate profits bottomed already, and you're going to be over here under Trump or Biden, and you're going to be going up here, positive earnings. So they're buying stocks based on 21 numbers with the dots up here. Only on Wall Street could you get compensated with that bullshit forecast. I mean, there is nothing, quite literally nothing, you know, that if it was Biden, if you were to undo or change the scope of tax reform, there's absolutely nothing that would get that number up there. Okay, so think about it. I mean, you're already thinking about the right question. Thanks for asking it. But again, my call the whole time has been it's follow the money. You know, the money is and jobs. The Fed cannot print. They were able to print for J.P. Morgan's banking and trading divisions some short-term cash flow. All right, that's what they were able to do. All right, they weren't. You know, they're not able to create that as a perpetuity or something that if you're looking at the future value of cash flows, that's going to continue. What you're going to see if profits deteriorate is further erosion in loan losses, further erosion in net interest margin, further erosion actually in everything that they probably just pulled forward in terms of incremental business, where in a lot of cases, JP Morgan and the other big banks just put more leverage upon companies that only have leverage or they don't have anything. I mean, that's the main observation. You can't fix a leverage problem with more leverage.